Hi everyone, a massive warm welcome to today's Monday market update. As always, really enjoyed these sessions, and boy, we had a big 24 hours. The signs were there over the weekend that the market was going to see a pretty volatile Monday open. Now, Bitcoin often leads risk markets, so that's equities, so US stocks, and Bitcoin and crypto being the most highly risk asset class out there generally gives us a guidepost because it trades 24/7. We get that information over the weekend. Really, all we can get about stocks and what's going to happen there can be in the futures markets. But by and large, we can look at Bitcoin and crypto as a bit of a signpost to what the traditional markets are thinking. And over the weekend, we saw a pretty significant move to the downside. I won't say significant, it just broke some key supports. It broke 20,000 again, which gave me a bit of pause. I'm thinking, okay, well, this week, Bitcoin's probably going to retest the lows, got about 19,000. Traditional markets are going to open lower. And what has it done? Absolutely has. So use this in your arsenal when you're looking at these markets, because Bitcoin and crypto are now totally intertwined with the macro. And right now, the macro is looking pretty horrible. When I say macro, I'm talking about the bigger picture. Let's dive straight in because we had some big news last week with the Jackson Hole Summit with the US Federal Reserve, where they give an outlook about where the economy is and where it's going. Now, a lot of pundits were, and I personally was hoping that we'd see a bit of a change in language from the Federal Reserve. That didn't happen. They're going to go harder for longer. They're going to keep going until something breaks. So the US dollar is going higher on this, and a lot of risk assets like Bitcoin, like crypto, like US equities are all moving lower on that news. So super important to pay attention to that. Now, the three big charts I'm going to show you right here for your own information is the US dollar. Super important that we pay attention to what's going on here because the US dollar has gone parabolic. Now we can almost get rid of the double top, although we are looking like we're just still retesting again. But the dollar, once it gets through this level here, there's nothing stopping it from around about 118, 120. So just keep that in mind. Now, the dollar and Bitcoin crypto has always had historically an inverse relationship. So when the dollar is surging higher and making new highs, that means that Bitcoin generally is in a bear market or is in a very low ebb. When the dollar is breaking down and finding consolidating and moving lower, that generally means Bitcoin is in a bull market or trending higher. So absolutely keep that in mind. If we have a look on the RSI on the dollar, it looks like the bulls are weakening over time. However, the macro situation suggests that everyone wants US dollars right now. We're even seeing US Treasury bonds being sold off. Everyone wants dollars. So that's basically the shift of capital moving from stocks, crypto, other gold, other asset classes, and moving directly into the US dollar. And especially when we see what's happening in Europe, Japan, and elsewhere, the DXY is essentially, when we say it's the US dollar, it's the US dollar compared to a basket of other fiat currencies, much weaker fiat currencies. And some of those are the euro, some of it's the yen. They're doing terribly against the US dollar. So this, in my mind, looks to be going higher. And as long as it's breaking up and going higher, crypto is going to see massive headwinds. So this is on the back again of the Federal Reserve. Every time they look to tighten interest rates, and they're going to do it for the next couple of months, when they tighten, it means that they're constricting the supply of US dollars in the world, making the cost of capital harder, decreasing the amount of borrowing going on, et cetera, which in turn drives the dollar higher. So that's why we're seeing this market dynamic at play. Now, diving deeper in the weeds, the harder and further this goes, emerging markets are going to be in the poop. They're going to begin becoming insolvent, and we're going to see a lot of countries begin to feel the pressure because everything is denominated in US dollars. Okay, let's just pop on over to the S&P 500 futures. So this is super important to pay attention to because it is early morning by now, I think, in the US. When the stock market opens tomorrow, look out, should be some carnage. This is the futures markets right here. It's actually it opened with a bit of a gap, and this is to the downside. So we had a real big run up to this trend line, also the 200 daily moving average, had a full-on breakdown, and now this is mirroring the 2008 financial crash. And if that happens, it's coming all the way down to about 2,500, I believe. But different dynamics at play, different market structures. Back then it was the housing bubble that burst. We'll see if that happens again, but just keep this in mind. S&P is really flagging here, and this is kind of what the Fed wants to happen. They want to see a big markdown in risk markets, really cool demand, get a lot of liquidity out of the system, and a lot of that over exuberance and sentiment, because there's still a lot of sentiment out there thinking that we're going to turn around pretty quickly. They're going to cut interest rates and they'll go back to loose monetary policy quite quickly when they've made it very, very clear that they're not. Even if this is one big marketing scheme, which I think it might be, they're trying to really push markets downward to really decrease, like we said, a lot of that demand and capital out there. It's going to be interesting to see how it plays out and how long they can tolerate this, because they push this lower, they push everything lower. We're heading towards a recession. So we're going to have to really look next year about what's going on. But in the short term, it doesn't look too positive. Now, if we look on over to Bitcoin, it's broken that key support at around about that 20,000 yet again. Now, it's mirroring what happened back in January, where we had this channel that was rising and then a breakdown there, and another channel that happened there around about 28,000, had another significant breakdown. If we go out to the weekly, this is probably one of the better views as well about what we're trying to achieve here. So what Bitcoin really needs to do, as a point of note, is reclaim that 200 weekly moving average as quickly as possible. However, if it doesn't, what we're doing here is really trying to confirm this area down here, this low area, which is about 17,500, if I do not mistake there, around about 17,600, 500, depending on which exchange you're looking for there. Bitcoin really having a move down here to confirm this overall low. If we can confirm this low or even make a higher low, so this low here, this low would be higher than the last, even if we come down to really test this 300 week moving average, that would be great as well. But for these markets to truly bottom, it really puts people to the test. And around this area, it seems like a really logical place. After everything we've been talking about for weeks in these videos and also with our advanced clients, this is the area that really will bring in buyers. Anything below 19,000, anything below 17,000, well, it absolutely can get there. I don't know how long it's going to be there, because there's buyers just waiting for these generational buy areas. And we've got layered all the way down in terms of our monthly newsletter. I know a lot of our clients are ready to catch this dip, because I just don't know how long it's going to be there. The macro situation will turn around. The monetary situation will turn around. These are areas you really want to get interested as buyers, because money is made in periods of disagreements. If the consensus is telling you one thing, like right now, everyone's saying it should be short this, everyone's saying that it's going to zero, it's dead, all that. That's not how you make money, by following the crowd. You really want to look at the bigger picture, which is what we really try and put forward with our clients. But like I said, look at the RSI. Once this breaks this line, and obviously it's going to take a little bit, but once the trend breaks over, a multi-year trend from the height of the bull market, this has a lot of runway to move higher. So again, I think a reversal is going to come quite quick and quite hard. It's going to be breathtaking in terms of risk assets, but we need a few things in the macro to line up with what's happening here. So just keep in mind that that is all playing out. And if it's just too much, if it's overwhelming, there's no harm in it sitting it out as well. You can wait for this all to play out. These areas, especially bottoms, they take time to form. So this rectangle, I think it was, last time I checked, takes about 140 days. That was the last bear market that it took for this trough area to fulfill itself before we had to move high out of it. So by that, if we're looking at the previous bear market and we see this, then there's absolutely every thought that we're only halfway through this bottoming accumulation phase, where it's going to get a little bit rocky, it's going to get turbulent. You do also have to think of the big picture, that we could see a bit of a real sharp drop. If there's some really big bad news, if credit markets seize up, or something out of the ordinary happens, then that is absolutely possible to go lower. But again, just look at where we are, extremes of the market, look at the on-chain data, look at all those data sets that are really lining up, saying, things look pretty bad in terms of we're at one extreme, but they can't last here for long. It's almost like holding a beach ball underwater. So just think about that. All right, and just finally, guys, if you are avid readers of our monthly newsletter, we have buy and sell signals in there. And a lot of these cryptos that we have here are beautifully falling into our buy channels, or buy zones rather. So we've already dropped into the F buy zone, so that's under 1450, so that's fantastic. We're in the top buy zone. Also, a couple of these cryptos are just dropping absolutely perfectly into these support zones. So if you're looking dollar cost average into this market and wondering how and where, when we do these, we line them up with critical resistance and support. So keep that in mind when you're doing this, and you can overlay them. Also, use them as an educational tool. Overlay them with your own charts, or you can follow them. That's absolutely fine. But you really want to educate yourself in how to build them yourself. But if you're just looking at some of these charts, they're all looking fairly good in terms of where the cryptos are pulling back. These are all healthy pullbacks. And bear in mind, a lot of these altcoins are already down 90+%. They've had a little bit of a rally, and now we're seeing the contraction again to really round out those bottoms before we have that pulse higher going into this next cycle. So just keep that in mind. All right, guys. So yeah, keep your hands in your pockets for this next little phase. It could get really bumpy in terms of what happens in the macro. The US dollar seems to be just riding out of control until something breaks, and we'll see what happens after that point. But as always, have the eye on the long term, position yourself for that next cycle. And look, these are times of opportunity. So have your alerts set and go to town. All right, guys, have a great one. Bye.